If you are afraid, don't do it. If you're doing it, don't be afraid. Genghis Khan. And that is not the brother of Shaka Khan. Oh gosh. And also that quote I gave you over the weekend from Hannibal Barca. That is not the Thomas Harris character from Silence of the Lambs. Oh, I've had fun with that. Anyway, my friends, you gotta laugh. And as you watch these markets crash, you have to know that we've got potential opportunities. Now, do not panic and think, oh no, I'm not making a practice trade on this crash. Well, no, you're not, because we don't have the confirmed weekly vertical crossover going down yet. And if these markets are going to continue to crash, don't worry about it. You're going to have plenty of time to jump into a successful practice trade. Do not start getting itchy finger. I got to trade, I got to trade, I got to trade. Guarantee you what that'll get you: an unsuccessful practice trade. You don't panic. And again, just like Genghis Khan told us, if you're afraid, don't do it. And if you're doing it, don't be afraid. How do you not be afraid? You practice trade. God, I like that rhyme. I'm gonna own that one. You practice trade over and over and over again until you get it. The same thing about how do you get to Carnegie Hall? Practice. My friends, how do you get good at this? You practice. Otherwise, you run out of money real quick. So let's jump into these markets. Talk about what is going on. Guess what I'm going to put in as the special training today? Inverse funds, how to make money when markets crash in your practice trades. That's going to be your special training, and you're going to get it if you're a subscriber at chartingwealth.com. If you're not, it ain't going to be there for you. So again, make sure you go ahead and sign up. And if you're listening to us on YouTube, please push the right-hand subscribe button at the bottom of the screen. Let's jump into these charts. Down for the day, the S&P 500, 3.31%, even more, almost 4%. The NASDAQ 100, consequently, as things are supposed to be, bonds are up 1.51%, gold up almost 1%. Isn't that looking beautiful, friends? So let's start first with the S&P 500. Starting the week off trying to cross over, going down. Derivative, remember how we kept telling you the derivative oscillator was negative over the last 2 weeks? That was telling us something, that investor sentiment, whether overbought, oversold. Remember what the derivative oscillator teaches us? Read about it in your book. If you don't have the book, buy it. Charting Your Way to Wealth. It explains it. We also posted for you this last week the trainings on the derivative oscillator. So again, very important to understand what the derivative oscillator represents. The triple smooth version of the RSI. What does the RSI show you? Again, great trainings there. We'll put those out again soon. So we have a crossover trying to take place. It won't be confirmed until Friday. And if it is, we'll have a weekly vertical crossover on Friday that might give you a jumping in point for a down practice trade at that time. We shall see. So we go from the weekly to the 2-day, and of course, it is crossing over, hammering down. And again, remember, the last one closed on, the last full 2-day candle closed on Friday, and this latest one will finish up on Tuesday. This is the first day of the latest one, but it's a big one. It's a booming. It is, remember, we had that crossover going down on Friday. And now, of course, we have it pushing through the weekly trend line, way through the weekly. So again, a big, big down day. 4-hour chart, same thing. It crossed over, again, weekly going back to the 18th, and then went up a little bit, and then started really the hammer down there on Thursday the 20th, following through with that 2-day crossover going down on Friday the 21st. And then the big down in the morning, a little further down in the afternoon. So again, waiting to see how it sorts out. If there's a pullback or a pull up, we might say, we'll see. We'll continue to watch. Now, even more down is the NASDAQ 100, way down, 3.86%. Hasn't crossed over going down yet. Derivative oscillator's gone negative. Price percent oscillator sure heading down. We'll see. It is, of course, blown through the 2-day trend line and the weekly. That's just the first day of the latest weekly candle. So again, we don't call any of these candles until they're drawn. 2-day also blew through. Now we saw that happen going through on Friday. There was some pullback action on Thursday and Friday, pulling through the 2-day trend line, and then of course crashing through it on Monday, first day of this latest 2-day candle. Look how it went from green, a green derivative oscillator, to a gigantic red down candle. Again, we'll see how that candle finishes drawing on Tuesday. Remember, it's a 2-day candle. So we saw down movement in the morning matched with the same down movement in the afternoon. So again, price percent oscillator dropping off the deep end along with the derivative oscillator pegging down. That's where we are with stocks, folks. We'll wait and see how things sort out at the end of the week. But we have ongoing trades on 20-year bonds and gold, don't we? Had the crossover going up back on the 31st. And again, sluggish to start, but look at how it's booming this week, up 1.51%. Derivative oscillator gaining momentum, has been going on into the 5th week now. Derivative oscillator, again, gaining momentum. Price percent oscillator spiking up also. We go to that 2-day chart, and boom, that's a big start to that candle. We see price well above the weekly and the 2-day. And again, we go to the 4-hour chart, and what do we see there? Let's see, make sure, yep, so we go to the 4-hour chart. Remember, we had that rotation over on the 4-hour chart. We're looking for that entry point. We found it on the 18th, rolled back a little on us there on the 19th, and then took off on the 20th, 21st, and now the 24th. Boom, heading up super strong. Again, amazing. So we'll continue to watch. Hopefully you are practice trading 20-year bonds. They are just booming, as they should be, with the market crashing. So keep watching, keep that practice trade moving, keep your eye, very importantly, on that 2-day and the weekly, and let's see how things continue. What about gold? Isn't gold beautiful? We had that weekly vertical crossover back on the 10th of January. Gold went sideways a little bit, perked up back on the week of the 31st, and then sort of rolled back on us, but took off last week and taking off this week. Again, up right at 1% for the day on Monday. That 2-day chart, remember the 2-day crossover back on Wednesday? The jumping in point somewhere around 149. Has that not done beautifully for you? Check it out. 158.53 was that 2-day recross. Not gorgeous? Hopefully you practice traded that. Of course, we see the derivative oscillator gaining upward momentum. Price percent oscillator continuing to sail upwards. And we go to the 4-hour chart. We see really strong movement up in the morning. A little bit of a slowdown in the afternoon. So again, keep your eye on the prize, primarily on that 2-day and weekly chart. Do pay attention to the 4-hour chart too. But it is beautiful to watch how quickly gold just hammered up. So again, watch for stocks. We'll see how, again, usually in these rundowns, things will level off, maybe pull back in the opposite direction a little bit. So expect some of that. Pay attention. Follow your charts. Remember, the bigger the chart, the bigger the potential gain. You want to, once you make a jumping in decision, you then move back and you follow those bigger charts, the 2-day and the weekly. Folks, that's where we are as we end the day on Monday. Exciting week. We'll be here with you every day. We'll see if there's going to be a crossover going down. And again, if there is at the end of the week, it'll give you some options to jump into an inverse fund on a practice trade like SH, which is the short of the S&P 500, means it goes in the opposite direction. Look at what it did over the course of the last couple of days, last 3 days, somewhere around, let's see, $23 or so, and right up to $24. So again, gaining quite a bit over a 3-day period. And of course, PSQ is the short for the NASDAQ 100. What did it do? Again, doing the same kind of thing, somewhere around $22 up to $23.64. So again, that's just over a 3-day period. So we'll continue to watch, see what there is to see, what there is to learn, practice trade all this stuff. Thank you so much for being with us, friends. If you hadn't purchased our book, we would appreciate you doing so. Follow the link in the show notes. You have questions, problems, concerns, we'd love to hear from you. cw@chartingwealth.com. If you live overseas, email us. We'll send you a PayPal invoice. We'll send that book to you wherever you are in the world. All the best from the whole team at Charting Wealth World Headquarters.